Welcome back. Well, Sasol hosted its Capital Markets Day today, the first strategy update since 2021. The chemicals company detailed a plan to strengthen, grow and transform its business in line with its previously communicated strategy. The plan was underpinned by a robust financial framework showing that the group is set to continue to deliver value for its different stakeholders while maintaining its decarbonization target of a 30% reduction in greenhouse gases by 2030. Sasol CEO Simon Baloyi joins us now to unpack the strategy in greater detail. Thank you so much for your time, Simon. Of course, a day that a lot of investors have been waiting for. And Sasol really giving market participants the trajectory of a fundamental reshaping of the business. Would you say that because of what you have already done and what you are looking forward to doing, that the worst is over for Sasol?
Yeah, thank you for the invite. How I'll summarize it is that we are at an inflection point. Okay. That is why today we firstly reconfirmed the strategy of strengthening the foundation and growing the business through value accretive decarbonization. So it's a decarbonization journey that also creates value for the shareholders. On the strengthening the foundation, on that pillar of the strategy, we spoke about resetting and turning around our international chemicals. That's underpinned by our go-to-market strategy. It's underpinned by an asset optimization and underpinned by cost consciousness. On the Southern African side, it's all about the coal quality, operations reliability, and also there making sure that we address internal and external costs. So this was, a marked departure in terms of how we've approached this before.
Let's actually dig into the Southern African operations. We know a number of operational challenges that you have gone through. You speak about the lower quality coal that you have seen there. So you've been trying to work around that. And also you talk about cost efficiency. How will you be balancing that cost efficiency with the costs that are now required to actually get your operations to a higher level?
At our Southern African operations, our guiding point, or what we call the true north, will be a break-even oil price of $50 a barrel. And that will be enabled by three things. Firstly, is making sure that we return Secunda to its previous volumes. And we have today shown a clear plan of how to do that. We also have to make sure that we contain our cost. We've previously, between FY24 and going to 25, we did contain costs within inflation. We have to continue with that. This is focused on both internal and external costs. And finally, making sure that the feedstock to our operations is at the right cost and the right quality. So that is where the focus is going to be. We are busy implementing a destoning plant that is going to fix the coal quality. It is quite natural that closer to your coal reserves, closer to your plants, your coal reserve, at the best geology. However, as you move away from the original mining areas, you go into difficult geology, and we now have a clear plan to address that coal quality. And in that, we did indicate to the market it will be done before December this year. So there's clear milestones to deliver value for our shareholders.
And would you say that the elevation there will be from your own internal measures and tools to elevate the performance rather than looking to macroeconomic tailwinds that would normally come from the oil price?
Yeah, when we gave our financial framework, we did present clear priorities that will improve our finances. And the first one was to improve free cash flow, which is hinged and underpinned by operational efficiencies and cost containment. And through that, we can then deleverage the balance sheet. And that helps us to become a resilient company. And that resilience means we have to do this through the self-help measures. We did, admit that you will need, we gave the assumptions that underpins what we've presented. So there will be some market recovery, but more than 70% in both international and Southern African operation will be underpinned by what we need to do ourselves. And we've shown the plans and the targets and the milestones. And I did indicate to the market that every 6 months, as when we see them, we'll give feedback and the progress on our journey.
Well, let's cross on over stateside to your chemicals business, your international chemicals business that has fallen behind on competitiveness. Talk to me about the self-help measures that will form the reset and the new growth phase there, and if there are any macroeconomic tailwinds that you are anticipating.
We do look at various reports that talks about the market. You must remember that the chemical markets is undergoing a downturn, which is primarily driven by the oversupply that came out from the capacity that was installed, especially in China. But it's a global oversupply.
Yeah.
And that has led to this downturn. And we expect there will be some recovery, but this recovery towards the end of the decade. So it's not a quick recovery.
Okay.
So we are then focusing on the self-help measures to reset and turn around this business. You did, see in our presentation, we indicated an EBITDA of 750 to 850 million US dollars by 2028. This is a 3 times improvement from the current 288 that we did in financial year 24. So the 3 key priorities that are going to allow us to reset and turn around that business is firstly the go-to-market strategy. So we have changed our approach to how we're approaching the market. Then it is the asset optimization and rationalization. To this end, we've already closed or mothballed some assets. In the United States, we've closed the phenolics value chain. We have mothballed the Gube value chain. In Germany, we've mothballed the alkyphenols value chain, and in Italy, the linear alcohol benzene value chain that has been mothballed. So we've already taken decisive actions. And the final lever is the cost optimization. Yeah, we are implementing an enterprise resource planning that allows us to be able to, manage our operations functionally on a, international chemical global business supply chain. So we're doing those priorities, which is, cost optimization, asset rationalization, and go-to-market strategy. And we believe those will help us to be able to deliver on the promises that we made.
Yeah. All right. Well, let's take a look at the emissions reduction roadmap. Sasol is aiming for a 30% reduction in greenhouse gases by 2030, but actually with a more reduced budget. With the capital cost of between 4 to 7 billion. That's more than half the initial capital cost estimates. What's been worked out there in the difference?
Yeah, the emission reduction roadmap, this roadmap, the 30% target by 2030 remains the same to what we gave in 2021. However, we are now doing this differently. That is why you see a 70% reduction in capital on that roadmap. So we were pivoted to what we call a value accretive emission reduction roadmap. So we'll continue to maximize coal usage in our gasification plant. However, we'll reduce the coal that we use in our electricity generation. So we are going to increase the amount of renewable energy. So we'll use the coal for products. However, for electricity generation, we are pivoting more towards renewable energy. So our previous target was 1.2 gigawatts. We are now moving to 2 gigawatts. As you should remember, Sasol is already the largest procurer of renewable energy in the country in a private capacity. So we're going to continue on that position. We are also going to use market mechanism, which are allowed on our legislation to make sure that we offset the CO2 on CO2 emissions from our operations. And that will allow us to do the 30% at much reduced chemicals by ramping up on renewable energy and using the available offsets. We'll also maximize energy efficiency savings in our own operations as well. So this is a value accretive. So you are decarbonizing or reducing your carbon intensity at the same time protecting value for the shareholders, but also jobs. You should recall or you should know that Sasol does directly and indirectly will impact 1.4 million jobs. So it's absolutely essential that this South African energy champion continues to transition at the right pace with the market.
Well, thank you so much for your time and really allowing us to dig deeper into Sasol's turnaround strategy and its plans to be future fit. That was Simon Baloyi, CEO for Sasol.